All right. Hey, everybody. This is Jer. I hope everybody is having a great week, whatever it happens to be. I hope it's great. Um, so, I wanted to do another video on Waitr. I am probably driving people nuts talking about this company, but I don't care because there's so much value in it. And it's like I want to scream it from the mountaintops. And so that is what I am doing because I want more people to be able to see this company. And I'm not a bag holder. I am a investor in it. I got in at 99 cents. Currently, as of today, which is a Sunday, it is at $1.50. Um, and I see so much value. I see a lot of value in this company, obviously. I did a video on it and did a research report for it, DD Research. You can find that on my Twitter. It is JER_JOHNS. I currently have it pinned to my account, so it's like up at top. And it breaks down all the value that this company has. Recently, Morgan Stanley increased their ownership in it. I believe they own anywhere between 10 and 15%. I'm not for sure exactly what the number is. There's a visionary investor, Tillman, who is the owner of Landry. He owns a big percentage in this company. The company is a food delivery service. They do food and grocery, like prepared food and grocery. They also do, I believe, liquor delivery. I'm not for sure on that. And then they recently bought 3 different payment processing companies. The payment processing company Flow does high risk payment processing, which is like to be used for like cannabis and medication delivery. And so to do payment processing for those for like dispensaries in states where it's legal. They also are a investor in Focus Technologies, which is a company that's being founded by one of the founders of SoFi, which does crypto. So this would potentially help Waitr Holdings go into crypto payment processing for smaller, mid-sized, and even large-sized companies. They invested $15 million, I believe, in that. They have also started doing in-stadium orders, which helps to be able to bring, so they are able to bring food, prepared food from the concession stand to your stadium seat. They have started doing this in mostly college stadiums, but I can see this actually growing into doing stadiums for professional teams as well. Let's go to the next one. So, the big thing about this, the big thing that caught my eye was that Morgan Stanley had invested in them 10 or 15%. This was done in the end part of September. With that, I started looking at other things that Morgan Stanley has invested in lately. And I came across, let's see here. I came across Morgan Stanley's investment into Grubhub. They currently, from what I could gather, own about a 5 to 6% stake in Grubhub. So, what does this indicate to me? And it indicates it to me, and I'm not saying that it's true. I'm not saying that it's going to happen, but I'm saying that Morgan Stanley having a 15% ownership in Waitr and a like 5 or 6% ownership in Grubhub opens the door to a potential takeover, to a potential buyout of Waitr. I'm not saying that's going to happen. Again, this is not financial advice. Always, always, always do your own research before trading or investing. But I'm saying that the potential is there, and if Morgan Stanley wanted to, with the ownership in both of these companies, they have some sway to make this happen, to make a merger happen. And it would be perfect for Grubhub to be able to do this because it gives Grubhub, which is mainly in like larger cities, mainly in New York, the chance to be able to go into new markets across the U.S. in smaller or medium-sized cities where Waitr is currently. It also gives Grubhub the potential, if they chose to pursue this, the potential to be able to start doing payment processing for smaller and mid-sized businesses, which could be they could open a subsidiary of Grubhub to be able to do this. Sorry about the noise out here; it's kind of loud. But so they could be able to do this. The potential, the earnings and growth potential that this gives to a company of any size, Grubhub or other, is wild to me. Whenever you're looking at the company valuation for Waitr, I believe that currently at $1.50 a share that they are currently valued at like 170 million. I might be wrong, do your own research on it, but that's what I'm seeing market cap for, anywhere between 170 and 200 million ish for market caps on different websites I've visited. So to me, Waitr is way, way, way undervalued at this price. And I think that's why Morgan Stanley went ahead and bought out 15% of the company, because they saw the value in it. And I'm thinking more people are probably going to see the value in it. So, not only do I think that it would be valuable for Grubhub to consider doing a buyout, I think that there's potential for Amazon food delivery to do a buyout. Amazon food delivery, if it's in the US, it's not huge yet. I haven't seen anything on Amazon.com for US, and I may be wrong, to do like prepared food delivery. They do grocery delivery, but doing a buyout of like a Waitr would give Amazon footing to get into the US market for food delivery, and possibly, since Amazon is backing Deliveroo, which is in some other country, not for sure where, backing Deliveroo, maybe they could be a connecting force to buy out Waitr, make it a part of Deliveroo, and start the business here in the US. Another potential that I see is Lyft. Lyft currently has a partnership with Grubhub to do food delivery in certain cities. If Lyft chose to, they could invest into Waitr, buy out Waitr, and then have footing of their own without having to have a partnership with Grubhub to be able to start their own delivery service, like what Uber did with Uber Eats. Walmart Plus, just getting started. I could see potential for them. They're doing grocery delivery, grocery and home goods delivery. I could see a potential for them to want to add in, hey, this is a great benefit to add to this service, food delivery. And in a lot of areas where Walmart is, which is smaller and mid-size cities and towns, Waitr already has a presence there. All they would have to do is just add Waitr to the mix as a part of Walmart Plus, and done. You have a great deal. You have something that you can offer your customers, a great value. It adds value to this Walmart Plus service. You get more customers added to Walmart Plus. It's a win-win. You grow the company out from there, grow the food delivery service out from there, and bam, you're done. The thing that I don't understand yet, and I haven't been able to piece together yet, is Waitr had bought out Flow so that they could do cannabis delivery, and I don't think that that's where Walmart wants to go with things, and I don't think it's where Amazon wants to go with things. I could see Grubhub doing it as a subsidiary of Grubhub. I don't know that they would want it as part of Grubhub, but a subsidiary of Grubhub. I could see Lyft possibly doing it. I can't really see, like I said, Amazon doing it, but I could see Lyft possibly doing it too. It is a great add-on service, and it gets you in the door before the door's even really open for cannabis delivery. Just my opinion, I would consider putting that as a subsidiary. Maybe not in the food delivery part of it, but as a subsidiary you could do cannabis delivery, and that market is just getting started as it's just becoming legal in more states across the US. All right. If not, Walmart or Amazon or Grubhub or Lyft, if I were DoorDash or Uber Eats, because you have such a strong footing already across the U.S., you could stop any competition from buying out Waitr and getting their foot in and getting more of the market share. Like I said, Waitr does service to medium and smaller cities where maybe Grubhub and Walmart Plus and Amazon and Lyft need to enter in for food delivery. Uber Eats and DoorDash may have some service in those smaller and medium-sized cities. I'm not for sure, but I do know that Waitr is in 900 plus of those cities. So if I wanted to stop the competition from taking market share, I would be in on Waitr and getting my foot in the door with this last mile food delivery service and stopping competition from being able to get in there and get that market share. Maybe I'm wrong. If I was part of of any of these companies, I would be considering Waitr. I would be looking at the financials. I would be doing my due diligence, and I would be making an offer. And lastly, I would make an offer, and I would get this deal done before too many people catch on to the value that this stock has, that this company has, because you will see an increase in the stock price as there's more interest, obviously. More people will catch on to this and want to be a part of the investment, and if it catches enough people's eyes, it becomes a meme stock. Is that good for the company? Is that bad for the company? I don't know. I think it's probably good for it, because if it catches a lot of attention and becomes a meme stock, anybody who is wanting to buy out Waitr is going to have to up their offer price to at least match whatever the price is for the meme stock territory, for whatever this becomes. So let's say that a lot of people see the value in this stock and they're like, it's $1.50. I'm going to buy 100,000 shares. You get enough of those people, or you even get some institutes that are like, oh crap, we got to get in. The stock price is going to rise. That's just how things work. Of course, you will have people that sell along the way that say, okay, well, this was where I entered. I want to get out. Okay, great. But I don't see the stock price, and maybe I'm wrong, I don't see the stock price going back down to below $1 range again. And it's been steady in between the $1.35, $1.50 range the last week. And I don't see that changing. So I definitely suggest that, one, investors get in while you have the chance. Two, if you are one of those big companies, or if you are a food delivery service or any other company that wants to get into this market, Waitr is your opportunity, and you want to do it before it catches steam and the stock price goes crazy, because once that happens, your offer price obviously has to go up to match or exceed that, and that might be a challenge. So that is my view on Waitr, and the opportunity for investors, or for even like a buyout of Waitr. Just my opinion. I might be wrong. And if I am, then I am. Don't take it as financial advice. Always do your own research before trading or investing. But I still see a lot of value in this company, even at $1.50 a share. Anything below $6 a share is a bargain, in my opinion. So do your own research. If you're a company looking to grow out and take a market share in a basically untapped market, it's not very tapped in those medium and smaller cities, 900 plus cities, with the chance to even adopt this payment processing companies that Waitr has bought into, or has bought out. Some of them, you can start to offer those payment processings to smaller and mid-sized companies, even larger companies. The potential for growth with Waitr buying it out or investing in it is just enormous to me. Not advice. Do your own financial research before trading or investing. And I will see you very soon. Love y'all. Mwah.